afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for our next topic. It's After the Close. I'm your host, Kevin Horner. I want to thank you all for joining me this afternoon at the close of the market. I just hear that bell in my ear here now, so we are officially closed. And what we're going to do today, as we usually do in after the close sessions, we're going to go ahead and have a discussion around what happened today, but also what could be happening tomorrow. And that's really the whole topic of after the close. We try to look through a series of charts, get a little feel for what might be maneuvering for us in the coming day, and see if we can't position ourselves with some trades that can set the table for tomorrow. So many of you don't watch the market or have the opportunity to watch the market during the live hours. And so this class is designed to give those of you who don't have that opportunity a little bit of maybe an understanding of some of the order types you might consider utilizing and so forth. So that's what we're going to cover today. But before we get into it, I need to remind you that we are making some changes to our Q4 calendar, which officially began yesterday in Q4's first day, October 1st. But going forward, the after the close session is going to be moved to a Tuesday timeframe for us beginning next week. And what that means is really that you're going to have me more consistently. And that's because I do a fair bit of traveling with the in-person events, and I'm frequently gone on a Thursday afternoon. So this will eliminate a lot of those misses for me. So my hope is that our Tuesday afternoons are going to be just as fun and certainly allow us an opportunity to start considering equity transactions for the next 3 to 4 sessions, in addition to just the next Friday. So, a Thursday afternoon, we really are limited in scope. Hopefully on a Tuesday, we'll be able to expand things just a little bit as we start setting that table for what will be a Wednesday and rest of the week viewpoint here for the next version of After the Close. So that's the plan, everyone. Let's go ahead and check on our disclosure so that we can get down to business for you all today. So first of all, remember that our discussions here on the channel are exclusively for your information and your education. We are not here making recommendations. We are not endorsing a specific approach to trading the market. We do talk technical analysis, of course. In doing so, we remind you that these are concepts and strategies that technical traders might choose to employ, but by no means are they recommendations. We're just giving you some ways of thinking about trading, ways to consider utilizing these available orders, and giving some consideration to some of the patterns that we might be seeing in the market. And often that means that you're going to be making decisions based on how you might be feeling about that current stock, the pattern it is staring at the moment. And sometimes those are going to be buys on a breakout potentially. Sometimes they might be buys based on a support test. But regardless, we're going to try and dive into all of that for you here today. So let's start with a look at how the S&P finished today. We obviously started a little bit favorable, a little green. We've got a red candle on the close, but that's because our close was below our open. But by no means a terrible day. We finished at a new high close here, up 4 points from yesterday. And essentially, I put in a line that just said, hey, this is what we were trying to work our way through with the opening trade, making a new high. And sure enough, we did make a new high. For those of you who may have missed the Trader Talk this morning, don't forget that's archived. It's ready for you, available to review. Ultimately, we talked about those ovals you'll see on the chart, the 20-day moving average drawdowns becoming opportunity for traders believing in the strength of this trend as continuing. They can join the trend on pullbacks to the 20 or potentially pullbacks to the 50-day moving average. And so that's what we've been thinking about as it relates to the SPX, and to be quite honest, we've been thinking about that very similarly as it relates to the NASDAQ 100 as well. And yeah, exactly. As JB likes to say, that candle's way too high. That can't continue. We know better than that, though. Will, of course, you know that. So what are we waiting on? We're looking for these types of validations. Got NDX moving to new highs, new all-time high close today. Also lower than the lower than the open today, but by no means problematic. Notice the 20-day moving average catching up kind of quickly now because prices have been elevated for a little bit. If we change off that single day 20 to a 10-day, you'll notice we have been below the 10-day on intraday moves. So depending on your comfort, some traders might be utilizing that 10-day moving average, but by no means is the 20-day problematic to the trend. Some of you might find this to be a little bit more comfortable utilizing perhaps just the 50-day. Notice how the 50 catches our last real low, which was actually a matching low in the NDX, right in the ballpark of 23,000 on the NDX, and upward since then has just been wonderful since that test. And again, that's just a measure of 8% up over a fairly tight window, only 23 bars, so that is just shy of well, by my math, I'm very bad at that, 5 weeks, excuse me. So almost 5 full weeks of up maneuver and about an 8% pop off the 50-day moving average. So the NDX continues to do what it's been doing, certainly led by that AI trade a little bit, and of course technology carrying that indice because, well, it's heavy tech, as JB and I will talk tomorrow morning for Trader Talk as we give you the broad market review then. So make sure you're on board for that one, by the way. Reminder that our Trader Talk on Friday mornings is only live. We do not record it. So if you'd like to participate and you get the Kevin and JB show, the banter that we offer each other back and forth, we'll be on at Market Open tomorrow morning. All right, we're going to quickly peek in on the Russell, which obviously finished at a wonderful maneuver here. Wonderful in the sense that we are back into the rectangle of resistance. I should put back my 3 major moving averages because you'll witness here that as we talked this morning, everyone, we had a test along the 20 last week, but since then, we've made higher lows, and those higher lows have led to a trade today that is now closing, if not yesterday, closing above the high of the low day back here. In fact, we really did it back a week ago on the 26th, but the continuation of small caps moving to the upside has been kind of instructive, of course. Rates continuing to pull back in terms of yield. And the long range chart on this one continues to be quite important. So make sure you're monitoring this because, again, a group of this significance, of this size, and what this speaks to in terms of the comfort for the broader market to take risk, this will absolutely be important if it does in fact break out. Remains to be seen whether we'll do that, but we are at a very much what many traders would tell us is an inflection point on small caps. And then we're just going to lastly peek at those semis because they had a wonderful day, a 2% finish for the day. Give us a little bit of a hammer candle. Some would call that a doji because we basically closed at our open. It is red because it's very similar. Our open was 66.33, our close 66.26. So we missed it by a few points, but ultimately hard to argue with an index of this size and importance trading at new all-time highs. We all know that new highs are not bearish. Now, with that in mind, the remainder of our class today, everyone, we are going to look for some trade opportunities for consideration. And what I mean are examples that we'll be considering to add to our example portfolio. I do have 3 positions on already that we're going to review in the final portion of the conversation. But let's go ahead and look at our 50-day moving average pullback scan. So I'm going to remind you, I'll spend a brief minute highlighting what this scan is, and then I'll remind you that you have the opportunity to go back into the archive here, find that class, and maybe the one that you want is right from the beginning. If you want to learn more about these scans, I share these scans frequently, so make sure you're utilizing the archive if you want to learn a little bit more there, okay? But let's go to the scan. We've got the 20-day moving average pullback, but essentially the 20 and the 50 are identical. All I've done is change the criteria so that it makes sense for a 20-day versus a 50-day. So here we're basically looking for stocks that have retreated and tested their 20-day moving average. And by tested, I mean that they today intraday low was below the 20-day moving average, while the close was above the 20-day. And what I did after that, after running that scan, is I opened up that watch list from my personal list here, 20-day moving average pullback, selected it, and now that entire scan resides in my watch list, making it really, really easy for me to simply work my way on down the list. Now, this list is alphabetical. You can always customize this, make this your preference. So if we want to get in here and just say, yeah, I don't need to know net change or bid ask or any of that, I'll eliminate that. Maybe I just want to see the percent change for the day as an example, or you could add in any number of additional columns in here, plenty for consideration. Let's base it on percent move in the day. So we have a tight groups that really weren't breaking out, but they tested their 20-day moving average today. So I thought we could look at a couple of these. And the way that I like to do this is just kind of start at the top and work our way down. And I'll remind you that my process is a little different than some of you, and that's fine. One of the key details that many traders consider is just looking at charts constantly can be very mindful for us. The more we pay attention, the more those levels will stick. If you're going to be a little bit more disciplined, you can, of course, set those levels, make some notes on your chart, utilize the tools at your fingertips. I mean, I'm just looking at this GE Healthcare technology. I can draw a resistance band in here. The reason that I think it's helpful to make these lines, make these notes, is that you can look at a chart very quickly and say, well, I don't need to pay attention. We're below my red line, therefore, I'm going to quickly move on. I frequently will listen to essentially what are just involuntary reactions that my body gives when I see a chart. Sometimes it's as simple as, I'm going to move on. Sometimes it's, ooh, it's an excitable detail, and I want to simply move on from those. But I want to bring that up because I think if you're finding ourselves staring too long at a chart, it probably means that we don't need to consider it. Okay. Yes, Posh, I'll be happy to share that scan with you. Let me add that to the chat, and I'll remind you all, when we share scans, these are not a recommendation for use. This is the 20-day moving average scan. These are not a recommendation. They are not guaranteed for accuracy. They are not guaranteed for timing either. So please keep that in mind. Now, GEHC, not necessarily prepared for a purchase here. We could say, as an example, that we've seen it residing in a bit of a range here, right? And once in a range, many traders are going to say, I will take the trade when it breaks the range. So it might make sense to document those levels. Maybe you draw this in and put a 79 in there, and then you notice the white ledge down below is just about 70. So I'll duplicate that, drop it down to here, edit that, and make it say 70. And this way I can just quickly make note of what I'm seeing on my chart. And then when I see the chart pop up the next time, I can quickly go, aha, I'm through resistance. Now that I'm through resistance, I know I can set my risk against that if I'd like. I can start to build my trade. My point is pretty simple. Once we spend the amount of time necessary devoted to watching these stocks that really stand out, and building a list, consistently reviewing it, the more you're going to find yourself absolutely prepared to act when something that you're waiting on occurs. That's kind of the key detail here if you're a trader. We need to be able to act. So if we wanted to trade the GEHC trade here, for a lot of traders, it's like a breakout. Hey, I'd consider this if I got a close over 79. That might mean it's ready to go for some of you. You might put a good till canceled buy stop order as an example out there to buy it if it starts to run through 79 to the upside. We're not going to do that right now. We are about 3 points away, but I think there might be better charts in here. One of the key component that I'll consider is the stock isn't exactly flying to the upside, right? We've run ourselves into a little bit of resistance at the 200-day moving average in blue. Yes, we've been through it, but we haven't really broken. So I like to just simply make sure we're moving our way on down the list. Now, genuine parts, alternatively, when you look at this chart, the thing that stands out to me is that we are above all of those major moving averages. The 200-day well down here, 50-day right beneath us, and we have just today moved from below to above the 20-day moving average. That might be one of those deals where a trader who's been waiting could look at this and say, you know what? There's a couple of tests, support line tests in here, horizontal support in this vicinity. And some traders might just say, yeah, I'm willing to put on a position here based on the expectation that we could stick with and maintain 135 as support. As always, not a bad idea to back out and double check on your time frames here, everyone. One thing that stands out on the lengthier one here, just might try to capture this peak right here. If I drew that through it, boy, some traders, depending on how you draw this, would say that this most recent move might be breaking that downtrend. Now, we have been above this gray line. This is the 100-week moving average, so trend traders might be kind of happy about this development. This is all about time frame, though, everyone. Never forget, your time frame for your trade will have a lot to do with when and if you are desiring to get into your position here, right? So be thoughtful. We'll move off of genuine parts. Let's keep on moving down the list. Groupon still in a downtrend. Global Payments, pardon me, in a downtrend. You can see that 200-day moving average pretty aggressively downsloping for such a lengthy moving average. We'll keep on working our way. Skyworks. All right, Skyworks has come into a bit of a gap zone, right? Had a big move lower likely on earnings in here. And it does appear that it filled that gap with this most recent move. So it may have already tested the low of said gap. But one thing that stands out on this chart for some traders is going to be the fact that it's above all those moving averages. And today, what we have is a close above the high of the low day if we thought that yesterday were our low day. So I'm going to zoom in. And I'll point a couple of key details out that might matter to traders. The first down here, we're going to look at the RSI. RSI did retreat to the ballpark between 45 and 55. And our reminder about RSI in the midst of a strong uptrend, for example, we would not look for oversold conditions in the traditional sense. Remember, RSI as a banded indicator offers us overbought conditions when it trades above the 70 line and oversold conditions when it trades below the 30 line. But if you're a trend trader, many will look at this as oversold conditions in that 45 to 55 area coincident with a proper pullback. And that's kind of what you're looking at right here. So in the last 2 weeks, you've seen that pullback from new short-term high to a higher low in here, right? Right from here versus these lows, still higher than that, which were higher than this, etc. You could also draw a little bit of a trend line right through all of this, couldn't you? So there's a couple of things that are standing out. And like I said, today, here was yesterday. Yesterday, we made that low in the pullback. We did not close above yesterday's high. So this might not quite be the type of criteria that a trader is going to step into immediately, right? However, that trader could very well believe that a move through this level tomorrow could be indicative of that momentum-based pop, right? So that's a possibility. So some traders might look at yesterday as yesterday's high on Wednesday, the same high on Tuesday, and see, hey, could we get through that again on Friday? And could that be our momentum-based trade? One thing for consideration there, take a look at this. If I took this bar, duplicated this, and went right up to this last peak, that's also part of a gap maneuver too, isn't it? So, this might be one spot for a pause at around 80. And of course, if you're a longer range trader, it's adding a little bit more time, you pretty much look at what's going on here with a rally up to that 83 spot and then the pullback to the 20-day as maybe entrance opportunity. it's, I'm doing maybe a little more work than some traders would be looking for, right? But this is a good question, probability trader. Let's talk about it. So the diagonal resistance considered to be a potential first sign of trend reversal, or is it the last high? Is there a way to tell? Always difficult to discern in the moment, right? Some of these patterns will be a little bit more clear, but I think frequently when we have a position that has moved to new levels, what we hope for is that the trend viewpoint starts to kick in. And what I mean by that is we start to see more support along those smoothed moving averages, like that 20-day. We've been above the 20-day since we took it out right here, right? So, the fact that we've held the 20-day now for 3 days is going to give bulls a little bit of confidence, albeit, not exactly, right? But remember that sometimes your initial break of a downtrend doesn't lead to immediate rallies. What it leads to is digestion and pause and so forth. In fact, we looked at this. Let's check this out. I talked about this a couple weeks ago in the SPX. What we had here, going back, let me think here. We had this on the chart. Okay, we're going to go right back into this window. So we'd gone a little bit, got outside. No, this is not what I was hoping for. There was a period that I was monitoring, and I thought I could have sworn it was the SPX. I think it was actually the NDX now that I think about it. No. All right, one more we're going to check on. Is it the SOX? Yeah, I think it was. So what I'm looking at, it was, I've noted this breakout here, and we had been outside. So this is a really decent indication of the kind of price action you'll get, right? We break out of a consolidation, and I say consolidation because we pretty much had gone sideways in all of this, right? A couple of months of action. We broke it here with a gap, and then while we broke it, we didn't get exuberance immediately, right? You can notice we've got a little bit of back and forth. These candles are a little tricky to discern. You've got one big fantastic candle, and then as I lift this oval, you'll notice you got tails here and tails here, and it's telling us a story, but it's not moving immediately, right? And that's really hard for some of us as traders to dive right on in and say, well, this action, the fact that we are above the downtrend line, have held the gap, that action should be considered bullish, because not only did we get above the downtrend line, we held it post gap. In fact, we've also made higher low versus this one or matching lows in here, right? All of that should be leading us to feel confident that there's continuation available, but not everybody would look at it the same, right? It's difficult, okay? And that's what I wanted to remind us about. It is not necessarily going to be easy. It's also not necessarily going to work in your immediate time frame. I think that's one of the hardest things that we traders deal with, is recognition that breakouts that occur may not lead to immense moves quickly. They might be testing our time frame. They might be testing our mettle, our ability to stay with that trade. Sometimes that means that we as traders might consider taking smaller positions. That way we can hold that position a little longer if we need to, right? I know it's hard to do that because you get comfy with the idea that I'm going to go full position into this trade, and then it doesn't move for you for 3, 4, 7 sessions, and your money's tied up, and you're wondering if you made a mistake, and now you're going to sell a few hundred shares or a few percentage portion of that trade simply because it hasn't moved in your time frame. So I'll just caution, it's okay to step in with a smaller portion that you can stick with, that you can allow the broader trend to work with. Hopefully that's something that traders are considering here. I know it's not always easy, but okay, so quickly back to Skyworks. We're going to move on from this one. I think we'll find some charts in here that might stand out a little bit better. But if a trader were considering buying into Skyworks here, you might be considering it because you'd be a buyer at support as opposed to, from an example basis, as opposed to a buy on a breakout, which would occur way up there about 6 points up. Okay, so for our purposes, we'll sit on our hands as it relates here. Let's see if we've got anything that starts to speak here. Now, again, downtrend in Teleflex. There's Expedia, or Expeditors, excuse me. No, that is not. Okay, so, maybe for some traders, you've got a support line in here that stands out. And maybe for some of you, you're finding stocks that you're not familiar with, and you're saying things like, well, I want to be in groups that I know, and I wouldn't blame you for that necessarily. So there's one that's made a significant move. Well, this is kind of interesting, isn't it? This is Medtronic. So, of course, by definition, I think we find Medtronic be here in our healthcare space, which might be intriguing, as healthcare has been a bit of an improver of late. Notice we've got a double or triple bottom down here, and we've pushed ourselves to the upper range. This could be an interesting spot. Let's see how this looks on the weekly. All right, I'm going to extend my order or my line to the left. Okay, so we clearly see a bit of significance at this zone, don't we, everyone? Right at about, what is this? We're going to call it 96. So we'll duplicate my ovals, and you'll see it here, of course, right at 96, and then one more all the way back here, also at 96. So that was in August of 2022. So this is a significant level, everyone, through which we might see more upside. Now, as that is the case, obviously, I don't know if it's going to break out. I also don't know, even if it does break out, that it's going to hold that breakout, but that level is very important. And so some traders might build an equity trade to buy on a new high trade over what would be the last 3 years, taking out a major area of resistance could be very significant. And some traders might already say, hey, this has moved through the most important area, depending on how you look at it. Some would tell you that you've got a bit of I'm going to try and draw this in here, long range head and shoulders, perhaps. All right, so there's your head, left shoulder, and then depending on whether you like, maybe this shoulder here, or this is a tight second shoulder, that could be the case. Regardless, we've already managed to move through a level that some would call the neckline here, which was the midpoint of this entire pattern previously. So notice as I zoom in, that our low of this week is on that neckline. And you've also got these lows in here too, capturing another ledge at around 90. So some traders might be positioning in here. They might be a little more comfortable based on what we've seen. Now, if we are prepared to be buyers on a breakout, let's discuss buying shares for a potential breakout. We can define our ledge as $96. Okay. And so what some traders would do is take a percentage of 96 and say, if we traded through 96 by that percentage, then I would feel comfortable buying into the stock. And then the trader might utilize a buy stop order. So let me answer your question here, Jay, quickly. The fact is, if you called this white line the neckline of the pattern, well, then this price action of the last month would possibly be considered to be a break through the neckline, and thus you could call it a long range inverse head and shoulders, because we are through the neckline. That would be the validation of it. Doesn't mean we have to break out through my red line at 96, of course, but this could be already considered to be a inverse head and shoulder pattern, and therefore some traders might say, yeah, this is setting up in a manner that they're comfortable. For our purposes, we're going to rely on that 96 level, and we're going to be buyers if we can move to new highs for our example trade. And so again, I'm going to do a little bit of quick math, and really this should be simple because we're pretty close to $100 a share. 1% would be a little less than $1, right? If you wanted something a little bit more confirmatory in nature, many traders might go to 2% or more. Set a percentage that you're comfortable using. Again, these concepts that I highlight and bring to the table are merely process that I want you to focus on. What I want you to do on your own after developing process is to then detail what it is you're looking for, meaning, is it a 1% intraday violation? Is it a 2% intraday violation? Is it something else? Okay, so we're going to use 96 as that entry point, but we want to be $1 above it. So we're going to call 97 on an intraday move, and that's going to be our buy stop order. And I'm going to set that. I'm going to put my cursor up here, just really close to 97. I'm going to right click, and I'm going to go buy custom with stop. Okay, now custom in this case, I'll go ahead and let's see, how's my balance working here? We got plenty to work with, I think. So I probably should see that balance a little more clearly, shouldn't I? Let's see. I'm not sure why I can't get all that in there. Should be offering me the chance to expand that, and it's not. So let's detach it. Not sure why I'm not getting the details. I customized it. I've got all my funds. Let's see here, cash available. Yeah, it doesn't want to add it for me for some reason. So my apologies, everybody. It looks like I've got plenty of balance to work with. So we're just going to go for it. We're going to do 100 shares. We're going to do it as a buy stop. Now I have to set this as a good till canceled. And I'm going to remind you that on a buy stop, that means that as the stock moves up through 97, we would then become buyers, and we have risk associated with that because while we think we'd like to be buyers near 97, we have no guarantee that that's going to be the case with our traditional buy stop order, because once it triggers, it becomes a market order. So we might close, having closed today at 95.48, tomorrow with this order, if we opened at 102, we're going to be buyers pretty close to 102. Okay, we don't have any way to detail that otherwise. Now we could call this a stop limit where we designate 92 as the stop and maybe a limit not to exceed 99. That could be possible. And then that tells us that if we buy, we won't pay more than 99, but it doesn't guarantee that we buy, right? We could trigger and still not purchase. So please keep that in mind as well. We're going to go with our standard stop to buy at market on a move through 97. And then the last thing we need to do is just determine our exit strategy. And so from a protective manner, we'll notice that our 50-day moving average up here is stated as 90. If you just look right below my cursor, it shows 92.85. So we're entering at 97-ish. Let's go ahead and just set our stop exit at about 92, which would mean it would have to trade below the 50-day moving average today, well, today's value of 50-day moving average, that is, in order for us to be stopped out, okay? So that's what we're looking at. And then the hope, of course, our plan here says that we could possibly move upward about 10 points or so, which is approximately the height of the move we've just made from back here at around 87 up to 97. Add that on top. So 97 might give you a target, ballpark to 107, but we'll worry about that after the fact. So this is how we might get into an equity position on the potential for a breakout. Remember, buy stop at market, once triggered, gives us a market price. We can't adhere to being a buyer at 97, but we're going to try to. So we'll place that as our example trade on Medtronic. And then, you know what? I'm going to go back and we're going to hit up that 50-day list. And I'm going to show and share that with you all as well. So here's the 50-day moving average pullback. Again, basic stuff. We've got short-term moving averages like the 20-day being above the 50-day, the 50-day being above the 100-day. Also that the intraday low today is above, intraday low below the 50-day while the close is greater than the 50-day. So that again is our view of a successful test of support. All right, and let me go ahead and add that in here. All right, we are nearing end time, everybody, I realize. So I just want to make sure to share this scan. I'm going to call this one 50-day DMA pullback scan. And again, all of these scans, not guaranteed for accuracy, not guaranteed for timing, not a recommendation for their use. So we had Block make the chart. I thought this one was a little bit intriguing from an example stance because we can see we've gone sideways in here for the better part of the last couple of months once breaking the 200-day moving average. But some traders would say, hey, Kev, not only are we above that moving average, we've held that very important 200-day moving average, and maybe we can build something here that trades on the possibility of the breakout here, and you surely could do just that. So this is kind of intriguing from that standpoint, having held the 200-day moving average now for a bit. Working our way up the list from the bottom, Walmart dabbling with the potential for a breakout. Looks like we could have a potentially a rising triangle or an ascending triangle here. Whether you choose to catch that bottom or not, it might look something like this. That could be a break. Here's the weekly on that. Definitely looks a little bit more ascending triangle-ish on the weekly here, doesn't it, everyone? So that might be building a potential for a similar style breakout trade. We'll continue on up the list here. Again, we don't have to make it hard, do we? We can just quickly work through and start making heads or tails of these charts and quickly doing what I call chart triage. Just saying, all right, I can see that this is run to resistance before. Maybe this will offer a breakout. A little dubious about its ability to hold the 50-day. You're going to say these things to yourself as you're working your way through the list. Oh, does it? The 50 DMA has the same scan code? Let me double check. Is that right? Oh, it does. That should not have been the case. Let me try that one more time there, everybody. So this is the 50-day. Let me share. There we go. That shouldn't be. There it is. One more time. There you are. That's definitely different for you. So that one's the 50-day, everybody. That last one again. Sorry about that. All right. Here's Lennar. Could be telling you something here recently. You do have a test of the 200-day. That might be opportunity from an example standpoint. Again, you're looking for something that really stands out, right? You like to find stocks that are already in defined uptrends and already moving is one way to think about it. This one, apparently, I've got a position on, an example trade on, has had an interesting support test here, right? Some matching lows over the last few weeks that have been tested. So that might be a little bit notable. And then there's an interesting one from Fang, the Diamondback Energy, having rallied into the same approximate triangle here for a while. So, maybe that's one where traders are building out their expectations, right? You start thinking about, man, if I could just get this one through that 200-day moving average on a close, boy, that would be a nice development in terms of the potential to turn what's been a downtrend for a while. I mean, we've basically been breaking down since way back here in August of last year. And I guess you could draw that downtrend line any way you'd like, but certainly could come back and catch the peaks back here from what was July of last year. So that's intriguing there, isn't it? That could be an opportunity for an example as well, but you're going to wait, right? You're going to sit on one's hands and wait. Got to wait on breakouts to test some of these strategies out. So, all right, you know what? We are just about at a period where we are about out of time. So I wanted to hit just briefly my example portfolio. So let's pull the 20-day, and we're just going to call it account positions. And this way, this is really easy. So I can work through that, but the ones that are part of my after the close are the ones we're going to look at real quickly. So let's check on CrowdStrike, which we ended up buying. I can put my trade details, show trades here. And I think it's going to populate for us at some point, but this has done a really nice job for us as the positions moved in our favor. We do not have an exit strategy on that trade right here. It's not a huge position, and yet it is profitable. It's working wonderfully for us. In fact, let's just double check. We've got a 430 call long and a 460 call short. So a long call vertical. We are basically, because the stock is through all of both of those strike prices, and we are well at a last trade of 496, well above the 460 call, we can choose to close this out here and walk away with essentially max profit. If I'm not mistaken, we got a $30 spread that we put on, and we can quickly peek at it. Cost us about 14 to put on that spread. So, or 13, excuse me, 1,300 to put it on, and $30, about a $1,700 $1,700 max gain, and we're sitting at $1,300. So we could close this one out come tomorrow if we'd like, and move off of that trade, since we are so far from this trade coming back down under 460, and really that's the risk, right? So you're profitable 13 out of your 1,700 in this example trade. Some traders might choose to take that off. That's a really high percentage of the maneuver. If you choose to stick with it and the stock holds all the way through October 17 above 460, that's where we would see max profit come into the trade. So could absolutely give that one some consideration for closing. We're going to go ahead and stick with it. We'll talk about it Tuesday and see how that looks as we allow more of that extrinsic and time value to leave the position. The other two here, Allegion and Globe Life. Globe Life has a sell stop order, so we don't even need to concern ourselves with the fact that it's moved against us. We've got that sell stop order down here. We did buy it up here. We're going to hope that the 50-day provides support on Globe Life. And then we'll double check on ALLE, Allegion. We've got our stop beneath the 50 by a comfortable amount. We have probably incorporated, if I'm not mistaken, the average true range when we did that. So about 3 points below the 50-day moving average, which is at 170. And our stop exit is currently at 168.84. So we're at a comfortable level. Some of you traders might want to be looking to raise that or elevate that to the 20-day, because the 20 days now been held all the way back to, I mean, it's been a while, everybody. We had a test back here, but these were essentially held. So very good question as to whether some of you might prefer the 20 rather than the 50, but stick with the time frame that works for us individually, right? We are all very different as traders. So some might consider raising it. We'll also take a look at this one come Tuesday. So it looks like we're right at time. As always, though, I'm very pleased to have you joining me for this conversation. Again, remember that we have changed the calendar for Q4. Well, we didn't change the calendar. We turned the page, so to speak, but the calendar in Q4 will differ, with after the close running at 4 p.m. market close on Tuesdays in lieu of Thursdays. Hopefully that means you'll get to see a lot more of me hosting the class. So as always, thank you so much for being here and participating. Follow Barb and me on, or JB and me, excuse me, James Boyd on X, James Boyd CS, Kevin Horner CS. If you liked any of the conversation today, let us know with a thumbs up down below. And don't forget, tomorrow morning, market open, trader talk in today's market. JB and I will take you through the paces of the morning. We utilize in the Friday class ETFs, exchange traded funds. It is not a recordable session for you. You do need to be there live. So check us out at 9:30 a.m. Eastern tomorrow morning. So with that, have a great rest of your Thursday, everybody. We look forward to catching up with you all again real soon.